Simon Davis with It's a Fencer's Life, Lessons from the Trenches.
This is a Fencer's Life, Lessons from the Trenches. I'm your host, Simon, and coming to you today with something that has I've come across recently. It's something that I haven't done for nearly 30 years, and it's called benchmarking, and using benchmarks to see where your business is and related entities. So I just wanted to go through that with you guys today and see what's important. So just a little bit of a backstory. How I come about this was, firstly and foremost, most of the time, if I'm out on site, you see me on my videos, I've got earphones in, and that's because we're busy all the time, and the phone rings, and you've got to down tools or and stop work to answer the phone, talk to your clients or suppliers or somebody who needs your accountants or things like that, people who need you. And with that comes then the people around you, your labourers, most of the time will stop, especially if you're in a small crew, will stop and wait for you to finish doing what you're doing and then move on. So there's a bit of a lost productivity. But in the now with the technology and everything else, I can listen to podcasts and things like that. And I was listening to a lady from the ATO. Yes, I know, riveting stuff. But she was talking about the benchmarks and how to find them and things like that, and why it was important. So I just wanted to jump on here, tell you today what I've done a little bit of research myself, and worked out where the benchmark for fencing in Australia sits and what it actually gives me to help work out whether my business is comparable or whether it's not comparable. So one of the things, comparing the industry benchmarks and why it matters. And firstly, I'll just push in. This is from the Australian taxation and the Australian government website. I haven't been able to find one for the American website, but the AFA in America should be able to give you some information. There is the US Bureau of Labor Stats will give you some information, and the Financial Benchmarking Services, RMA's annual statement studies will provide financial ratio benchmarks as well. Plus, you'll have custom benchmarking. That goes the same here in Australia, where we're at. So why comparing industry benchmarks matters? And number one, it's important for us because the Australian Taxation Office uses them to sniff out dodgy numbers. So basically, if your expenses, profit margins or income look way off compared to others in your trade, especially in the fencing construction, the ATO might reckon you're under reporting income or overstating deductions, which is not ideal, which means then they can actually chase you down and find out what's happening in your business and will cause an audit, which nobody likes if you're trying to do dodgy things. I've actually never been through an audit. I've been very lucky in the last 30 years. I've never had to go through one. But apparently they pull your business apart and go through absolutely everything. So the second thing is it helps you check if you're undercharging or bleeding cash. So this is more important than the ATO sort of sniffing around. It's more important that I want to know what my business is doing, how I'm performing compared to everyone else in my industry. And it's always been important to me to see where I sit in the industry, and I haven't really worried about everyone else, but I look at other businesses and go, well, how can they be doing so well here and we're not doing so well? Or, what are they doing different to what we're doing different? And gives you a sort of gut feel of where you're at. So it's it's like a gut check. So if your gross profit margin is miles below the industry average, it might not be just tax trouble. It could be you're pricing too low or carrying your costs that you shouldn't be. So it gives you a sort of a warning sign, like a flashing light that something is not right. It helps you make better business decisions. So comparing your numbers to the benchmarks can reveal weak spots, and maybe your material cost is too high or you're overstaffed. Again, it's not just a tax thing, it could be a profit thing. So I said I haven't done this for close to 30 years. I didn't know it was around. I've just come across this now. So when could you ignore it? And the short answer is rarely. You want to sort of jump on this and have a look at it and do a bit of research for yourself. I'm going to give you some figures in a minute so you can sort of gauge where you are, but it's just interesting to sort of see. But the bottom line is you've got to use it to your advantage. Don't fear it. If your numbers stack up well, happy days. If it's not a chance, if not, it's a chance to tighten up before things get out of hand. So I looked at the ATO, the Small Business Benchmarks, and I'll leave the website at the bottom in the notes, so you can go and do your own research and put your own numbers in. It brought me for the 2022 to 23 the updates. So it's only a couple of years old. The last update was on the 16th of March 2025, and it hasn't been publicised yet. So what does this mean for your business? One is alternative comparisons. In the absence of specific benchmarks for fencing services, you might consider looking at related industries such as carpentry or concreting. While not a perfect match, these can provide a general sense of industry standards, so they're very, very close. Custom benchmarking gives us a good idea of where we are there too, based on historical financial data. And it's good just to stay updated. So what I want to do is give you some benchmarks here for fencing here in Australia. So the key benchmark range is the total expenses to turnover ratio. Okay, so the total expenses of your business to the turnover ratio. So basically what we can do there is work out, I'll just share some figures with you here for those that are on can see the computer. Want to work through here. This is not what I'm after. The key benchmark range here is the annual turnover range, 50 to 250, 250 to 400, and more than 400. This is where the ratio you want to sit, 61 to 74%, is your total expenses on your turnover. For between the first bracket, second bracket is 250,000 to 400,000. If you're sitting in that, your total expenses should be between 69 to 81%, and if you're turning over more than 400,000, 78 to 87%. Other benchmarks that are really, really handy for you to have a look at is your cost of sales versus your turnover. Again, the three brackets. So we go the low, the medium, and the high. Low being 30 to 47% of cost of goods on your turnover. Your medium 37 to 50%, and your high is between over 400,000 is 40 to 50%. So what you can do is, and this is really, really easy to calculate out. You just do your cost of sales divided by your turnover. I've even worked it down onto the labour force divided by your turnover. Is a good ratio to work out for your own staff, to see in your business whether you're paying too much labour or maybe not enough. But if the low bracket, if you're spending if you're earning turnover 50 to 250, your labour force should be between 16 to 25%. Medium bracket is 13 to 22%, and the high bracket is 15 to 26%. So I did a really good scenario on my business over the last 8 years, and I've averaged around, my labour force has been around 16% for the higher bracket, and that's been really, really good. Then this year, 2025 bracket, it jumped to 64%, which means I had a massive increase in labour, and the gross standard for the government stats is between 15 and 26. So it was really, really important to me to find that, because we've found our cash flow has been really, really tight. We couldn't work out where we were bleeding. So that's number one. We look at straight away. I can look at the labour force. I'm spending too much labour. We become very top heavy quickly, and we had to make some serious changes. And that's just a really good example. One of our other ones you could look at is your motor vehicle expenses for your turnover. 6 to 10% for the low bracket, 4 to 7% for the medium, and 3 to 5% for the higher bracket. I don't know why that is, why that happens, but those are just some of the brackets. Again, I looked at my operating expenses over turnover. That was very important to me to have a look. That worked out for me. The average is for my bracket is about 50%, and I'm sitting at around 26%. So I was quite happy with that one to know that we're not out of whack. But again, in 2025, it jumped to 79%. So I had to go back through my expenditures and find out where I was making money. So it was just a really quick exercise. It took probably 10 minutes to punch some numbers in and find out what was sort of happening. And straight away, it just highlighted that I've got a serious issue somewhere that needs to be thought about, and was coming up. So again, for those that are here and watching the video, these are the benchmarks for 2023. Again, expenses divided by turnover. That's where you should sit. Take a screenshot of that so you can work it out. Your average total expenses, that's where they sit, 67 to 82%. The cost of sales divided by your annual turnover, the labour divided by your annual turnover, the motor vehicles expenses divided by your turnover. So something that is worth, again, as I said, very, very important to have a look at. The last one that I wanted to show you now is there is a actual benchmark system for all different types of businesses that the government has for Australia. I've highlighted the yellow one. Again, it just goes from low expenses right through to total expenses. You've got your cost of sales. It can sort of work through your different turnovers, but I brought it back down to the fencing, and you pick your bracket that you're in for total expenses, and say, oh, I'm in the medium to high range here, high turnover minimum range to the high turnover maximum range. You're between the 78 to 87. So you can have a look at what's working and where you are, and that makes a really good, as I said, just a really good benchmark to have. I know this is a little bit boring, a bit confusing. People say, well, why do we really need this? But it's something that is quite handy to know, to see where you're sitting, and quite handy to realise that there are possible areas of your business that could be lacking a little bit, or again, it just highlights big mistakes. And not so much, I'm not worried about the ATO so much, but some people may be. And one of the things for that is with the ATO, the way they're clamping down on businesses and trying to find out where they can get more tax money and everything is by using those benchmarks. So they'll gauge your business against the standard, and if your cost of goods, for example, or your expenses are too low or too high, possibly too high, it could mean that you're taking cash under the table somewhere, and they'll come sniffing and say, well, there's something not right there. So you can get yourself into a bit of trouble, and it's just the way they're gauging it at the moment. Backhanded sort of tactic, I would suppose, but that's just what they do. They're out there to get their pound of flesh all the time. But as I said, the benchmarking for me is not about the tax man. It is more about finding out where my business sits in comparison to somebody else's business or the industry standard in businesses. The sad thing about this in the fencing world, in the benchmarks here, is it doesn't itemize commercial, industrial, residential, or rural. It is just, and it doesn't break down suppliers for services or installers or maintenance. It is just a group sort of bundle. So you've got to sort of read into it what you need to with your own stuff, but something again that is just very handy for yourself to sort of see where you're sitting. And take it or leave it. You might not need to worry about it, but again, I wish I knew this probably 25 years ago when I was making business decisions to move into locations and move factories and do things like that. It could have helped me sort of work out exactly where I needed to position myself a little bit better than what I did do, and rather than just being a service business and for the bulk of my life, I've basically supplied and installed fences, and I never really had a shop front. I didn't like the sort of the retail side of the fencing side. It was more about hands-on and building fences and doing that. So and the majority of you guys that I talk to are all the same. So you don't have a factory, you don't have a shop front. You're just out there doing the install, supplying and doing the installs, and some are just installing labour only. So it's just something to get your head around, get you into the numbers. Again, as I said, it can be very, very boring, but it is very important to dig deep into what's happening in your business, but what's happening in comparison to a lot of the industry standards. So I encourage you to dig deep and spend a bit of time working on your business and not just in it all the time. And hopefully that makes a bit of sense to you guys. And that's all I've got today. So I'll talk to you again next week. Thank you very much for listening. Please leave some comments. Leave some even on the Facebook, the Fence Posts group, or the Profitable Fencer. pop in and say good day, and yeah, we'll talk soon.
Thanks again for listening to the Fencer's Life podcast. Be sure to follow on Twitter, Instagram, or the free Facebook group, The Fence Posts. And of course, Simon's personal Facebook, facebook.com/Simon M. Davis 1. And also check out Spotify to get weekly episodes. If you believe Simon can help you make a difference in your fencing business, please reach out to him on Messenger or visit his coaching mentoring site at theprofitablefencer.com. Until then, stay safe and happy fencing.